Hello, everyone. Thank you so much for joining us again for another weekly wrap-up. My name's Jeremy Cronemeyer. I'm the Operations Manager for Wickham Financial Group, and I have Graham Wickham here, President and CEO of Wickham Financial and Insurance Services. Graham, what happened in the investment markets last week?
Yeah, thank you, Jeremy. Thanks for our listeners jumping on the call. Yeah, from a U.S. equity standpoint, we saw the gains pretty tempered due to some stronger than expected employment numbers. So good news can still be bad news from the interest rate front. So we did see the Nasdaq Composite, though, rise about 2.4%, while the S&P 500 gained about 1.3%. But the Russell 2000, now that slid, that's small caps, that slid about 2% due to some weaker financials that were rolling out for those small caps, a part of that indices. So what did we see in terms of sectors and gains? We saw technology, surprise, surprise, really leading the front here. And Nvidia, that became the third U.S. company to reach $3 trillion in market cap. If we look at crude oil, that tumbled a bit after OPEC members announced plans to phase out some previous agreed upon cuts. If we look at U.S. Treasury yields, that began the week in a sharp decline after the May ISM numbers and the manufacturing PMI numbers reading dropped. But by the end of the week, we saw the rates really jump on Friday due to some really strong payroll numbers and the fear that maybe the Fed doesn't or will not be as aggressive in terms of lowering rates, meaning rates higher for longer. If we look at average hourly earnings, we saw that rise about 0.4% month over month from a year over year standpoint. That was about 4.1%, really undermining some recent data that suggested maybe the U.S. economy was slowing a bit, and that would give a little more runway for the Fed or the Federal Reserve. If we look overseas, we look at the European Central Bank. They did lower their key interest rates from 4 to about 3.75%, even though they were still having some lingering inflation. If we look at Canada, they saw some of their slower pace in terms of expansion, their activity, but that still helped to influence their decision on lowering rates. If we look at China, we're looking at their PMI surveys revealed some pretty strong manufacturing and service activity in May. Now, if we look at this week, we're looking at U.S. consumer reports. That's going to be driving the calendar, the economic calendar this week, as well as the Federal Reserve meeting on Wednesday. Now, they start meeting this right now, and then they'll have a rate decision on Wednesday. So we're looking at May CPI, Consumer Price Index, coming out, and that's forecasted to be up about 0.1% month over month, or about 3.3% year over year. But the main number that the Fed likes, or at least what we're hinted to that they like, is the producer price report, and that's coming out on Thursday. If we look at some other U.S. Economic data, we'll have the 10 and 30-year Treasury auction coming out later this week. And then we have June's preliminary consumer sentiment and inflation expectations. If we go overseas, again, just economic calendars on Thursday and Tuesday, we have the Bank of Japan coming out with monetary policy statement. China will be reporting their May CPI and PPI numbers. And if we go over to the UK, United Kingdom, we'll see their monthly GDP and employment reports coming out later this week. Jeremy?
Gotcha. Well, we always appreciate the information. Graham, I had a question for you. Going into these summer months, where typically it's usually a little slower, but with an election cycle coming up, how do you see the markets reacting during the summer?
You know, probably maybe status quo unless we get the CPI or the PPI numbers coming in a lot hotter than expected this week, would spook the market a good bit. You know, we've rallied pretty good since the first of the year. That might be an understatement. I'm not going to say there's not more room to go, but maybe we kind of waffle around here a little bit, maybe move sideways, you know, with yields popping a little bit since they really moved down. That might be an excuse if those hotter numbers come out with CPI and PPI. For the market to maybe pause, maybe pull back a little bit. Never surprised to see that as we go through the summer, into fall, election time, and hopefully, maybe we'll see one cut from the Fed. I don't know if we're going to see 3. There's still some on the street that think we might get that. Probably 1 to maybe 0 this year.
Gotcha. Well, we always appreciate the listeners, and thank you again for joining us every week. We hope y'all have a great summer. Check out our website and our social media pages. We're always posting new things on there, so check those out. And if you have any questions, please reach out to us here at the office or anyone on the team. And we appreciate it. We'll talk to you next time.
Take care.